Alrighty, Alpha Hunters, it is a wonderful Hump Day Wednesday, and we are seeing some pretty good action today, actually. Very nice gap down here on the SPY. What was this? About 2/3% of a gap down there to open the day on the SPY. Q's a little bit lower than that. But you can see SPY down. Kind of tried to make a little bit of a climb back higher for the first 2 hours of the trading day. And then roughly for the past 2.5 hours, it's just kind of been coming back down, continuing in the way of the gap. Kind of makes sense that we probably continued lower here the past 2.5 hours. This is not really the price action we were getting for the first 2 hours. Not something that you would say, okay, you know what, gap down, we're going to get bought up here. Typically, you want to see it bounce or you want to see it drop, and then the bounce come later. This is kind of a little bit more sideways consolidation. People not really knowing what's going on, but not really seeing strong conviction out of the buyers, and then people kind of stepped in and started selling. And yeah, there we go, selling down for the past 2 hours. Down pretty good today. Currently down around 0.9% so far. So take a look at the Qs. Q's had a pretty good gap down here. Currently down about 1.2%. Q's did gap down 0.8%. So pretty good gap down there. Pretty good gap down there on the Q's. Not really looking that great. IWM. Now, intraday price action, it's all good and fine, but really it's more important of how the daily kind of time frame looks. So we'll see that here in a second. IWM, nice gap down. And this is kind of what you'd want to see. This might indicate a little bit more of a bottom action. You got the good gap down here on the IWM, and it got bought up, right? Got bought up very quickly. That's what you'd want to see. Strong conviction out of buyers, not what you were seeing out of the SPY. SPY is just much more sideways, like not really strong conviction one way or the other. So not to say that the IWM doesn't go lower later, but we know it's been getting hammered here the past couple of days. DIA, the Dow Jones Industrial Average. Look at that gap down. That's also nice, strong conviction buying. First part of the day, it got to neutral twice, kind of double top there. Just getting positive after that gap down. And then, yep, past 2.5 hours. Rolling over there pretty good as well. RSP, equal weight SP 500. Nice gap down here as well. Strong buying here. So, and in looking at all of this, the Qs were definitely the biggest lagger, right? The big tech stuff was definitely the biggest lagger to start the day, right? I mean, you can see the RSP, the equal weight SP 500 was bullish there the first 30 minutes. So then you got to take a look at the Qs. Qs, well, this is the largest weighting, right? The largest weighting kind of stocks out there. You know, Apple, Microsoft, Google, Amazon, Meta. You can see that this thing dropped pretty good. NVIDIA, AMD. So that's why you didn't really get much out of the SPY. It was basically just kind of a neutral price action kind of day. The larger weighted stocks didn't do well, but a majority of stocks, you can see with the RSP, we're getting bought up pretty good. So that is kind of how to take today. RSP, we were kind of looking at this yesterday. Oh my gosh, we got that breakdown, right? We finally got this breakdown of this head and shoulders. Oh man, this looks so brutal. This looks so brutal. And look at that, we gapped down below it. We gapped down below that neckline, and within today, we retested higher into that neckline real quick. That's why you get this upper wick, right? Get that upper wick, boom, and then now we've continued bearish. So yeah, I mean that's a pretty solid play there. I mean, you could play that intraday, you could probably play that over multiple days. Easily, probably at least you're looking to come to the 50 EMA before you have any major concerns. But honestly, we're probably in for a pretty good durational pullback here. We're going to come down to some lower price levels. Take a look at that when we get to the SPY. DIA, the Dow Jones Industrial Average. Yeah, past couple days kind of got wrecked a little bit. Nice gap down today. Nice upper wick. I can tell you what, that doesn't look good because you gapped down below the EMAs, kind of below yesterday, just barely below yesterday. Retested higher. I mean, that looks like a pretty bearish kind of candle pattern there with that upper wick coming in today. We'll see how these kind of end today, but if they end at the current level, like the DIA current level or lower today, that's not going to look good. We're probably just going to keep going lower. IWM, yeah, kind of mentioned the big breakdown it had yesterday, and even going back to last week on Friday, this price action on Friday was just brutally bad. It was a brutally bad. Thursday, lower wick, breaking down some previous kind of support levels that it had over the previous like 2 weeks. You should have that continuation higher. We got that gap up continuation higher, and then it just faded it. We've continued bearish yesterday. Nice upper wick retest yesterday. Continued bearish today. Nice upper wick retest. Getting under the 50 EMA. So yeah, IWM not looking good. Let's see where the long terms are here. So we're going to have the 100, 200 down about the same spot. This is going to be an interesting, this is going to be really interesting because, it looks like we have a little bit of a, that inverted head and shoulders kind of down here. You got the shoulder neckline, head, kind of an inverted neck, neckline there, shoulder, and then we got that huge continuation. So we're going to have the 100, 200 down here around 181, 182-ish. And then we're going to have 178 down to like 175. It's gonna be also a pretty good spot, but honestly, I think 100s and 200s. If there's a moving average, and it's typically if it's just going sideways, it doesn't mean much. Not to say that we wouldn't pause there, right? You get back over here, back in August, we had 100s, 200s, kind of just going sideways. We kind of just bounced there, paused, but then eventually a couple weeks later, we rolled over and went through it. Same kind of deal here back in May. We bounced, we rejected off, it came back down, but then like a week or two later, we bounced and got through it, and we retested. And so, yeah, I mean, will we stop there? Will we pause there? Sure. Will we bounce there? Sure. Will it be like, that'll be the bottom and we keep going higher? I doubt it. I do doubt it. I think we'll probably come down to some of these lower levels. If we do come all the way down and take out that low from late October and hit into this 160 level, whew, that'd be a heck of a sell-off. I mean, it's not going to happen next month, but yeah, I mean, it'll be choppy the whole way. But just, I would imagine if we do get down to this level, this will probably be the next major level that we probably get to here on the IWM, where the 100, 200 are, and we probably bounce and we roll over later. That'd just be the way I would play it. Alrighty, Qs. That was enough on the IWM. Jeez. Killing me on this boring IWM stuff. Qs. Nice gap down today. We haven't really broken down so much on the Qs. Obviously, I think I mentioned this yesterday, a close below this lower wick on January 11th is going to be a big deal. It'll be a big deal. Obviously, we are currently sitting right above it with our current intraday price. And the reason why I kind of mentioned that lower wick there from last Thursday was going to be a big deal is that's also where the 20 moving average is going to be. A lot of people play the 20 moving average. And if we get below that, we're just going to come down to the 50. Like, it's like I wouldn't even look for a bounce too much in between those two levels because the 50 EMA is also going to coincide with this low that we put in back, our January low. So it would just make sense if we get below that, you're just going to play bearish. Simple as that. So that's it for the Qs. Do we come down to some lower levels eventually? Yeah. I mean, it'll be choppy. I mean, we'll look at all the support levels that we got to get through before we get to like some seriously lower levels. So I would just, play it to the price levels that are obvious, de-risk yourself. And then, you can layer in as you see the setup again later on. You don't have to be a hero thinking it's going to go all the way down to like 320. Like, don't look for that move. Look for the easy move. The next easy move is going to be easily down to this 50 EMA to the January low. And then probably down here to where the 100 would be, where all these tops kind of were back in, the summer, early fall kind of time period. Anyways, SPY. So this is where, kind of like how I was mentioning, the Q's not quite holding under that Thursday lower wick and under that 20 EMA. The SPY currently is. And not only is the SPY currently under that, the SPY gapped below that Thursday low. And that was a very important price level I'd kind of mentioned over the previous couple days, right? This low, let me get off the 100, 200. There we go. That low was such a big deal because it was very clearly we were in an uptrend. We had a sharp sell-off and buyers stepped all the way back in and pushed it back up. The fact that we just got below that level and we're not bouncing completely is that would be a very cause of concern if you're leaning bullish here. After last week, I was kind of mentioning with the switch on changes of leadership here on the SPY, making a higher high, the Qs making a lower high. I would be leaning a little bit more bearish here. Right now, that's kind of working, and I might even. I think breaking this Thursday wick, this past Thursday wick, this is such a big deal. That was such a big deal. We just gapped below that. We haven't really bounced so much today. We kind of just retested higher. So yeah, I don't know. I'm not really digging the price action all that much for the bulls. For the bulls, anyways. We're not really seeing a strong conviction on intraday. All right. So much for the kumbaya. Let's keep rolling through stuff. VIX, nice strong move higher. This is the one thing though. If you're bullish, trying to be bullish, wanting to be bullish, is the VIX. The way the VIX has climbed this week and has continued to kind of bottom before the market has topped. That's something that I mean you gotta kind of like, because typically the VIX spikes once you get to like hugely lower levels. Like we're not at lower levels. We are, how far are we from all-time highs? We're like 2% from all-time highs. And we're seeing the VIX kind of climb like we're, I don't know, 5% from all-time highs or something like that. I mean, we're seeing the VIX kind of climb here a little bit. And maybe people just feel like, yeah, we were a little too bullish. Right now, maybe you're seeing the VIX kind of normalize back to maybe where it should be. I don't know. But you're not seeing the SPY kind of drop off. So that's kind of the point is, like, people are getting protective. We're not really seeing the SPY drop as panic, right? Panic selling. So dollar has continued higher. Very nice breakout yesterday. Looking pretty good there. Gold, GLD, continuing that breakdown. Okay. So gold up a little bit today. Not crazy, but gold dropping off pretty good there today. Okay. Where are the long terms? 10 and not 10, 20, the 100 and 200 here, all the way down around 182. As far as moving averages go, that's going to be the next cluster. So around 183, kind of at this bottom area to 182, you're probably going to get some buyers in that area. Yep, that's about all I got on the old GLD. 10-year yield breaking higher, getting up to that 50 EMA. Maybe it consolidates here for a couple days. Maybe we see it push higher later on. A very nice 2-day move for this week, making a new high for the year. Yeah, new high for the year, taking out the January 5th high there. Okay. Yeah, looks pretty strong. 10-2 inversion dropping off very sharply. Interesting. So 2-year yield is jumping quite a bit. That is a very sharp climb past 2 days. Okay. That is a very sharp climb. All right. So that is interesting. I would imagine we're probably going to see the 10-year probably accelerate here soon. I would imagine we see the 10-year climb soon. That's what I think. That's what I think will happen. Well, we'll see. We'll see. See, HYG, high yield corporate bond ETF. Nice drop off here past 2 days. Yeah. Man, I'd be curious to see what we get tomorrow because we have another day like we've had today and yesterday on bonds. We're going to come break this level, and then people are going to say, oh, that's a double top on bonds. So, at least the HYG. Okay. Be watching bonds. LQD. A little bit of a lower wick kind of coming in today, kind of where we previously bottomed a couple weeks ago. And TLT continuing its breakdown, getting below the 50 EMA. Not looking too good there. Yeah, yesterday's breakdown was pretty brutal for the TLT. All right, we got sector performance. Take a look here. So, what do we got here? What do we got here? All right, real estate. Okay, so this makes sense. Real estate getting hit pretty good today. That makes sense. Yields are up. Real estate's going to get hit. It's not a good... Yields going up real is not good for real estate, so that makes sense. Utilities also underperforming. Discretionaries underperforming. Communications and tech are also underperforming. In line with the market. Materials, industrials, energies barely outperforming. Mostly just popped up there over the past like 10 minutes. Financials, healthcare, and staples outperforming. So utilities the only like safe sector, defensive sector not outperforming. Staples, healthcare outperforming pretty good today. Even though they are still down and negative on the day. Okay, so take a look. Intraday price action. Tech has held up pretty good. Yep. Okay, so tech's held up pretty good. They just got hit with a very hard gap down. Energies also forming pretty good. Materials, staples, financials, all kind of outperforming there on the intraday. And we got healthcare in line with the market there. Communications, industrials, and discretionaries underperforming. And then utilities and real estate. So, yeah, you can see that utilities got hit and real estate got hit right around that, just before that 11:30 Eastern kind of time period. Something happened, but it only affected utilities and real estate? I don't know. That's weird. That's just a really weird time. It's not like the top of the hour or anything like that. Really weird time to see just two sectors drop off like that.